Good morning. I was just touting the Philadelphia Fed survey. We got the Empire survey just a few moments ago. First time it's positive since February. I wanted to ask you off the top how things are going in the Pennsylvania area. I know that the COVID case rate has risen a little bit. Are you concerned that you fall back into the same situation that we're seeing in the Sunbelt states?
So in the tri-state region, Pennsylvania, New Jersey, and Delaware that we cover, we have seen a little bit of an uptick in the COVID cases, but the governors have taken action to slow the opening a little bit. So I'm not that concerned right now. I think generally the virus is pretty well controlled here. It's still a tragedy, and there's still a lot of work to be done, but I'm not very worried at this point for this region.
What's your view of the economics of the region? How hard have you been hit? How hard are you going to be?
So the region the manufacturing sector has bounced back. We saw our last report last month. We are seeing some good news there. Particularly the city of Philadelphia itself is predominantly eds and meds, and I'm concerned about those. I'm concerned not just about the large medical institutions, which have lost a lot of revenue because of elective procedures being curtailed or delayed, but also in the rural communities here. Those rural health systems have been hurt quite badly through this process.
What about the overall U.S. economy? Now that we've seen this flare-up across much of the country, are you revising your economic forecast or your outlook?
Yeah, so prior to this, we saw a pretty big hit in first half of this year, probably about 20% hit in GDP in the first half. We thought it would bounce back around 13% in the second half, ending around 6-7% down in GDP for the year, and unemployment around 10%. We are revising it right now because with the virus surging in the south and southwest of the country, we are concerned about that. I'm very concerned about that. So this is going to be a slow recovery. Until we get the virus under control, we can't get the economy back to full throttle.
You mentioned eds and meds. The eds part of it is your specialty. You came up as an educator. How important is it to get the schools open? How important to the economy this fall?
Oh, it's very important, but we have to do it carefully because we don't want to put people at risk. For example, we know that in the child care business, about half the child care institutions, many of them are small companies that are taking care of children. About half of them closed, and of the remaining ones, they lost about at least 50% capacity in remaining open. So it's just simply, if people can't find care for their children or be able to get their children to school, they're going to have a hard time working. And particularly in a knowledge economy where people's productivity is really their knowledge, if they're concerned about their children and that's weighing on their mind, it's human nature. They're going to be less productive. So I think it's very important, but we can't do it in a way that puts the children or the communities at risk.
Well, obviously a lot of risks for the economy that don't seem to be reflected in equity prices. Are you concerned about the level of stocks at this point and whether or not it's sustainable, or we might be seeing a bubble that could pop and take the economy with it?
So the equity market, the stock market, is a measure we look at, but I often remind myself it's not the real economy. So for me as a policymaker, I'm looking at the signals coming from the real economy, employment data, inflation data, and so forth. That is my main concern right now.
Well, do you think there is any role for the Fed, though, in perhaps controlling the rise of equities at this point?
At this point, we at the Fed had to act early and aggressively to help stem the damage from this unprecedented pandemic. And we did that. And so that was job one. Now, as we start to climb out of this, hopefully sooner rather than later, we will address other issues. But we had to act to secure the economy and help save as much of the economic infrastructure in the country as we could.
What more can the Fed do? Lel Brainerd suggested yesterday that you let the economy run hot for a while and explicitly say you're going to let inflation rise. Is that a strategy on the table for you?
So we've been saying for a long time that the 2% inflation goal is symmetric, which means we should overshoot it. We're having a difficult time doing that, like all developed economies. I'm supportive of the idea of letting inflation get above 2% before we take any action with respect to the Fed funds rate.
Do you think that at this point the Fed can do a lot to stimulate the economy, or is it really up to Washington and the fiscal side?
I think there are things we can do. Our toolkit, we continue to lend, and we have that authority. But yeah, I think the main issues that we're facing right now tend to be on the fiscal side of the house. I would agree with that.
What would you like to see? What's the most important thing to come out of Washington? What kind of aid? I know you don't want to mention a specific program, but what kind of thing, where's the economy weakest that needs help?
So I think a couple of things I worry about. And again, I don't want to tell Congress what to do, but there are things I worry about. One is a cliff effect of unemployment insurance. Yes, there is a need to get people back to work, and people want to go back to work. But we can't just cut it off, because if we cut it off, people stop spending, and that'll be a hit on the economy. Second, we're seeing the same kind of cliff effect with state and local governments. If they start laying off lots of people, we talk a lot about anchor institutions. Well, one of the big anchor institutions in our economy are state and local governments. So they need some help. So those are two that I think are really important. And the third that I worry about, and we're doing a lot of work at the Fed on, is small businesses, how to maintain the strength of small businesses, particularly for minority communities. The National Bureau of Economic Research recently put out a report saying it's about 40% of Black-owned small businesses have closed during this pandemic. This is not only decimating to those businesses, but to the communities they serve.
Well, what can the Fed do? You are banking supervisors. Yesterday in a speech, you were critical of the Paycheck Protection Program for focused more on bank relationships rather than need. How do you redesign that, or where can the Fed act?
Well, I wouldn't say I was critical. What I was saying is that a lot of these micro enterprises, that is enterprises with less than 5 employees, and we have lots of those in Philadelphia and all around the country, they don't have banking relationships because, for a lot of reasons, they don't necessarily trust the institutions. That's the root problem. We have to solve that problem. I don't accept the fact that people don't have a banking relationship as the status quo, and we should just accept it. We should work on that. We should bring people into the system so that they can have access to things like PPP programs and just have lower fees and better service to build their businesses.
Before I let you go, I want to ask you how you're following the economy these days. We've had 2 better than expected jobs reports. Do you think we get the same thing for the month of July, and does it really matter?
It'll depend. Because of what's happening with resurgence of the virus, I'm a little skeptical that we're going to see as good a jobs report, but we'll see. But it all comes down to, right now, controlling the virus. The health of the economy is dependent on the health of all of us. And until we get the virus under control, we're not going to get the economy back to where we all want it to be.
You mentioned the fact that we're coming up on this fiscal cliff in July. In the end of September, we're going to have a lot of your lending programs expire. Do you anticipate at this point they continue?
Potentially. It will depend on what the state of the economy is at that time.